The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is the Friday edition, Friday the 18th of July. Gosh, time's flying. Hey, halfway through the summer. Oh, hey, that's depressing. And thank you, Steve Rhodes, for a great kickoff to TFNN programming right at 9 o'clock Eastern Time. And then, of course, Daryl Martin, fabulous show. Great trade he put on there with that crude oil. So let's look at the market right now. Yesterday was 160 points down. Today we've got back 50% of that, 80 points at 17,057. The S&P is up 12 at 1970. The comp index is up 44 at 4409. You've got gold. Gold right now is down about 10 at 1307. Silver's down 20. Is that 20 up at 20.60? 20.80. And you've got high-grade copper at 3.18, pulling back quite a bit from that peak D that we were looking at in the Chapman Wave methodology for higher peaks, and you've got to be careful. The dollar is up. It's at 80.58. We'll be looking at that in a moment. And we've got bonds, and this is going to be very interesting because bonds right now are down just 3/30 seconds at 138 and 132nd. Had a fabulous move in bonds. And yesterday's slide and then recovery and then double down was something that we've got to talk about for a moment right now. I had a couple of questions. I'll get to the question. Let me just check my emails and other things. Right, everything's set. Let me talk about this. For my subscribers to my opening call, basically what we were looking at is that I spoke about it on air, but I also showed it in great detail to my subscribers and explained it in a very, I hope, a very cogent way, in a way that said, be careful because we are about to get 9 days at new all-time highs in that cup formation. Let me show you from the 9th of June at 16,970, pull back for 3 sessions to 16,703, and then ran up for a total of 9 to a new recovery high on the 20th, and that was the 20th of June at 16,978. 9 days. Pulls back, has a very big black ugly candle on the second day. A retest of the high failed, breaks sharply below the 9-period moving average, goes down for another 2 days to 16,746, 40 points higher, for a rising low bar, and then goes to a high bar at 17,074 on the 3rd of July. I've spent a lot of time over the years looking at parallels between candlesticks and cup formations and arch formations, etc. And my conclusion is that if you get something repeating twice, it's unusual to have it repeat 3 times, but if it does repeat 3 times, you've got to be prepared that after that 3rd time, something different might happen. And here we are. 17,074 on the 3rd of July, pulls back. The second day has a very sharp black candle down to a very deep candle below the 9-period moving average, pulls back to the 60,805 level within 4 sessions, makes it the pattern I call on the candle, the Chapman Wave Roman candle, turns around, and what does it do yesterday? I didn't even think it could do it, but I said, there's a chance we might make a nominal new high. We should expect just a small candle. It's very unusual to pull back from the very bar that makes the high with a very, very deep, ugly candle. But we had 2 bouts of really bad news yesterday. Market plunges. The Dow goes down to 17,000, and no, it was 16,966. And now this is what we've got to be looking at. Are we looking at something different? The 3 times 9, we've got 27 sessions, and out of those 3 times, you've gone exactly to the day of the time and the sequence of candles, and you make a 9. Today, if there's no new high above 17,151, it'll be peak D. Peak D is where you've got to be somewhat careful. Question in the den. No, that was Zidal's question. Question, can S&P move back to the high of 1985? Still, okay, so Darryl answered that question. Let me do this. I want to show you something. I'm going to, if you don't mind, if you're looking at Tiger TV, it's the same chart. Just give me a second. I'm blowing it up. Well, that's the wrong term to use. I'm expanding the chart, magnifying. There you are. I'm magnifying the chart, and I'm showing that, in fact, there is a dashed sub-channel that says in the next 2 to 3 sessions, if there is a break below not just today's low of 16,977, but yesterday's low of 16,966, then we can expect that the up channel, this intermediate term up channel, will support at right there in the crux, let's call it right there, between 16,936 is the Dow, and absolutely has to hold 16,900s, would say, hey, I'm copying the other candle moves. I'm having another very strong down candle, and I'm going to challenge that uptrend. But wait a minute. What I mentioned, did I mention it to subscribers this morning? I was thinking it all very early this morning. I was thinking it through. Now I can't remember if I actually mentioned it. Yes, I did. I mentioned that the high volatility index, straight off an all-time high, was something that is a little unusual, and it suggests that we might be having a shorter-term correction. But to say that it's a major top, that would be really unusual. Usually major tops start very quietly, and only later on do you get the Richard Arms Trin index start to expand sharply into the 3s and 4s, and the VIX index, the volatility index, start to really push much, much higher. So I'm looking at this now. I'm going to just move this chart away for a second to show the background. And the background says there was a huge move to the upside, which was what I call a single leg A. I said there was support in the 13.70s. Well, it opened at 13.14, went to 13.55, and the VIX right now is towards the low at 12.58. It's actually almost at the low, 12.58. That shows buying pressure. And to keep it as simple as possible, if that buying pressure is maintained and the short-term and the VIX index stays in the mid-12s, then all of a sudden you've lost the impetus for selling pressure to maintain the downward bias in the indices. All right, so let's make that clear. If by the end of the day there's options expiration, so they can do anything they want, if by the end of the day the VIX index starts to get back to 13, you'll see a pullback. Now, as far as, let's go back to this chart here. This is the Dow chart, and I'll go through all the numbers. You know what? Let me just go through the numbers now, because this is Technical Friday. I'd like to talk a little bit more about the technicals that I'm looking at and why I'm looking at them. So let's just say that I did them all. That's right. You know, I've been so busy since very early this morning. I guess I've been working till 11:30. I've been working since before 4 o'clock, looking at different charts, etc. So I did not expect that the Dow would rally as much as this. My thinking was that the Dow somewhere today would bounce somewhere to the 17,020s, maybe the 30s. Yeah, we are at 17,062. And every indication that says we should be pulling back, even the 30-minute chart. Let me just show you something here. The 30-minute chart, which I had just a second ago. Yeah, the 30-minute chart has hit of the E-minis has hit the 200-period exponential moving average in leg G/C, And the stochastics at 90% MACD is good. So far, we don't have anything. There'll have to be a sudden bout of selling pressure to make a change there. And the 120-minute chart here in the E-minis has broken above the 200-period moving average very sharply. And, in fact, it's broken above, just want to double-check here. Don't want to give you the wrong number. Yeah, above the 50-period exponential moving average in that 120-minute chart. And this is very interesting because, look, I drew this in for subscribers this morning. I always show the daily and the 120-minute chart of the E-minis because they're trading almost round the clock. And I drew it in and I showed a cup formation, yet another cup formation. And that cup formation said, if you rally, then you should find resistance at previous support. And that's said right there at 1963 in the E-minis. And where are we now? We're at 1965. So that's trying to test what was resistance. This is going to be a very important session today. Why? Now let's go back to my Dow chart. Why? Because every other time in this sequence, we've had the Dow make a little kind of what I call a silent doji candle after the top that was made like at 16,970 back on the 9th of June. And only then did you start the down move. And it was only two big, very strong down candles. The next time you got that silent doji, and you got, boom, a sharp move down, and then there was that residual sell-off, and then there was that morning where things looked just terrible, and you opened, and it went flying down on the 26th of June to the 16,746 level, and then reversed sharply up, and that actually was the turnaround that started to move to the next all-time high, 9 periods. Now what I'm looking at is we've just had 9 periods, and when you look at the 17,074 high of July the 3rd, that candle was an inside day. It wasn't a very big, black, ugly candle like we had the very next day. Now, actually, I like it when it's red and green because red is, that's really negative and the green's really positive. But this tells a story right there. And then you had the same sequence of opening, looking ugly, and coming right back. And this Chapman Wave Roman candle says if you close above it, anytime in the next 2 sessions, doesn't matter whether it's the 1-minute chart or whatever, that's very positive because that says you've taken away the lure of that wick of the Roman candle, and it's not going to blow up. There's a little period of time that you have, and you can make another arch formation. So arch formation, let's talk about that. Another pattern that I'll look at is I'll be seeing arch or cup formations. Why? Because when you see that, yeah, look, you can see it much better on the 120-minute chart. Is there any water left here? Nope, there's not enough water, but that's okay. Look at this chart, and it shows the sequence of the sine wave so beautifully. Let me expand this. Look, here you are. Look how many cup formations in pretty much a left side, right side price time match move to the upside and then to the downside have been made. And look how many times it completes the move, and then what does it do? It comes all the way back to retest the left side low. Even if it's higher, it tests it pretty much in time. I'll be right back at 877-927-6648. Basil Chapman, Tiger Technicians Hour, 1087.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back, and let me finish this Dow Diamonds. This is what we'll be looking at, which is the trading vehicle for the Dow. So the pattern has been repeated over and over, and in the diamonds, it went to a peak F at 171.32 yesterday, reversed at the inside track. That's that up channel, narrow little band that is invariably a reversal area. And on the downside, we would see in the next, say by Wednesday afternoon, whether or not it's going to test the 168.72, that green line there. And it doesn't have to be an exact confirmation with the chart arch that I've drawn. In fact, my eye says there's a good chance that it's going to extend out before it even gets to that area. If it does, that'll be by midweek next week. But this at least gives you a sense of the sine wave movement, where you go from a cup to an arch to a cup to an arch to a cup to an arch. And now we're going to see, is there a change in the plan? Is the stochastic, which is down at the 29 area, really close to turning up? Look how the unbalanced volume has held. But is the stochastic not going to get under 20%, but in fact start to turn up here? And all of a sudden, I have to draw in something different, something like that says, hey, there's a change. We're done with that pattern. You can get rid of all of that, because now what we're looking at is a move to the upside that is based on a rising channel of about, where's my little protractor? Let's just say it's about 27%, 28% incline. So let me leave you with this for this particular chart. The jury is out. The 9-period moving average that it hasn't been able to break above is at this particular point 170.21. It's trading at 170.21 right now. No, that can't be right. It's 170.31. And a close in the 170 for the diamonds, 170 point close. In the 170.48 to 170.53 area says, hey, you got to be careful here. This is a bigger bounce than you anticipated. It's saying yesterday maybe there was too much emotion to the downside. We're trying to get rid of that emotion. And in fact, there's a very important period. My suspicion, and it's just a suspicion based on what I'm looking at right now. Let me just check bonds. The TLT's down 40 cents. Okay. And the GLD's down $1.22. My suspicion is that we're going to close somewhere right in there, which would be at 17,031, about 25 points down from here. But that's just my suspicion. Now, there is even a way that it could rally to the dashed red line, way up to the 17,090s to the 17,105 area, and then pull back. So when looking at this, the jury's out. We're only 2 hours exactly into the morning session, so the day is young, but there's a lot of action that's occurred so far. I'd like very much to go, well, first of all, in the Dan question on Facebook, and Facebook is acting very well, but it needs to clear 68.30. The moment it does that, then the 68.44 high that was made just recently peaked in the Chapman wave. That's going to be a target. The stochastic's good. The MACD is improving. It needs to cross positive and hold. And the weekly will immediately go to leg C at 68.45. What's your support? I'd say in the 66s. If it breaks that, then 64.90s is a 9-period exponential moving average. So far, based on the 120-minute chart, very nice action. If it could just by the end of the day clear that resistance, that'll be a good sign. If it pulls back under 67 by the end of the day, it says, struggling a little bit. Not bad, but it is not looking weak. It's just not showing the strength it needs. Let's go to Dan in Baskin Ridge, New Jersey. Hi, Dan. How are you?
I'm doing well, Basil.
Good.
Basil, I'm in TVIX at 268.
Okay.
And I am looking to set a stop. I was expecting a bounce, but this is, just a little bit more than I expected. I want to make sure I get a stop in.
So let us do this, folks. We're looking at the TVIX, and the TVIX has had a 2.65 low that it retested. Must have been yesterday, the 16th, 2 days ago. Exactly. The volatility index went to a lower low, but the VIX index, the VIX index went to another unrecovery low, or a multi-month low, and the VIX itself at this point is trading at, let me just double check, 12.52. It's down, and it's down over 2 points. That's big. But there wasn't a couple of things. The spike that we had yesterday was very unusual in that the sentiment and the buying, the selling pressure just went to extreme levels on a daily basis really quickly. I mean, to go from the 270s to the 320-something is a huge percentage. I'll be back, Dan, if you don't mind holding. We'll be back with Dan.
Thank you.
We'll look at the TVIX.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, folks, got a couple of stocks in the Dow. Visa is up 3. Actually took a beating the other day. It's up 3. Boeing is up 1.25. So you've got enough Dow stocks that are doing quite nicely, and that's really helped the markets. This is the area that on the upside would be one of the levels that I'd be looking at as the resistance to watch real closely to see whether the market is going high. And right now we've got on the line, we've got Dan in Basking Ridge, New Jersey, and we're looking at TVIX, which is the 2 times VIX short-term trading index. Basically, whatever way the volatility goes, if the volatility goes higher, the VIX index goes higher, this is the one that goes with it. If it goes lower, this is the one that goes with it. And right now, it's trading at 2.85. Now, Dan, it's a pity that I didn't, as of yesterday, we were not in it, because I probably would have said that if it hit a certain level, and probably would not have been as high as it was because I didn't expect it to get there, was to raise the stop accordingly. But what would have happened is you would raise the stop accordingly, and it would have gone to the high. It went all the way to 3.28, so $3.28. And this morning it opens at 2.95. So you wouldn't even have had a chance to get out in the 3s, which would have been ideal. So now we can start fresh. And what I'd say to you at this particular point, because from the action I'm looking at right now, unless on Sunday evening going into Sunday evening, Monday morning, there's some real conflagrations. Something's going on worldwide, or certainly in the Middle East, or there's some kind of news that is being reflected very poorly by the indices. We've got to be prepared. Now I'm going to go back for the folks that are listening from the beginning. I've got to go back to this chart and say this is the first time we've got candlestick number 9 also becoming the sharp down move instead of what I anticipate might be the case, that Thursday afternoon we would roll over and Friday would be a small candle, and then Monday we'd be going down. We did it all in one day, the whole thing. So now, and we haven't made a lower low. This is another unusual thing. In every pullback that we've had in the sequence of 3-9 bars to new recovery highs, we've not had a higher low bar from the ugly candle. There's always been at least one, if not two, moves to the downside or another ugly candle. And that's the case that happened on the 12th of June. Ugly candle, but the next day he made a higher low, then a modestly higher low the next day. Then on the 17th of June, slightly higher, and bam, it just took off on the, was that the 18th? Yeah, on the 18th. So I've got to be prepared right now to say, be careful that there's a chance that we had just a one-day wonder, and that now, because of the buying pressure involved with the Fed still pumping money in, that they might take this by Monday or Tuesday to a new all-time high, about 17,151. Why? Because the candle is forming, of course, as I said, it's just over 2 hours of trading. That's really nothing. But the fact is, on Fridays, we've had, not last Friday, but the Friday before, remember, we had that surprise big move to the upside. So I'm going to say to you, you've got a profit in this right now. I'd be inclined to take something off so you've got your profit, and then to be absolutely safe, by the end of the day, you're going to have to make this decision, but by the end of the day, I would not be taking a loss on my TVIX position that I've got. Why? Because if it closes 1 penny away from the stop that you thought you'd put in, and like today, Monday, there's instead of a gap up, there's a gap down, you won't be able to get out with a profit. So I want you to protect your profit, and I want you to be considering that you in fact will be making sure that, okay, let me just also say that you don't really want to put yourself at risk, but at the same time, what if you don't get stopped out, or even if let's say you do get stopped out, now you've got one bit of a profit and one part that's break even, and all of a sudden, on Sunday night, things are just terrible, and Monday morning, the futures drop 15 points before the opening. So you've got to assess whether you want to take that risk or whether you want to just take some profit right now, and you can always get back in. Getting back in is never a problem, right? It's a problem if it had to gap one of the ways on Monday, you're not in, and now you have to decide that's the direction you want to go in. So I'm going to suggest to you, tighten up, take something off, tighten up your stop, and make a decision whether or not you can hold it all the way through until the close, just before the close, if the price hasn't been hit. But you're going to have to make the decision whether you want to hold it through the weekend. Look, we were down 160 points yesterday. Some of it was emotion, but some of it was actually some stocks that really made Ds and Es that look like they're not going to be coming back very quickly. And I'm just saying to you, you might want to be considering that if this market is going to go back at least towards the high of 17,151 on the Dow, and the S&P is up 0.77%, the Dow's up 0.59. This time the S&P is actually a little stronger than the Dow. Then my suggestion to you is, be careful. You'll always have another trade, but if it suddenly gaps up on Monday and you have your TVIX, then you're going to have to say to yourself, uh-oh, he has a loss I didn't have. I had a spectacular gain yesterday at 3:55 or 4 o'clock, and now it's dissipated. So you want to stay in the game, and the way to stay in the game is to use money management. The way to use money management is to say, I'm prepared to risk X, but I'm not prepared to risk more than that. And I'm prepared to give up sometimes for sake a gain that might be made, because the chances of the risk mean that I would lose way more than the chances of the gain. And also emotionally sometimes, it's just better to be safe than to be sorry.
Very good.
So that's kind of my answer. Why? Because we're up 100 points in the Dow, up 15 points in the S&P. That's about, in both cases, it's about, I wouldn't say 50%, but I'd say it's about 30% more today than I had anticipated. And I don't want, I don't want to be, even if we turn around in the next 15, 20 minutes, I want you to be thinking of taking something off to be able to give yourself at least the cushion of a gain, and then you can work things out.
All right. Thank you, Basil.
Thank you very much for calling, and it was a good question. And the other thing I wanted to mention is yesterday we saw, we had John from Philly call, and we were looking at the 30-minute. Let me just see if I can go there. The 30-minute, here it is, if I can find it quick enough. Yep, there it is. The 30-minute, and the 30-minute TVIX has just made a peak D. Not just, this morning it made a peak D. So that says be careful, because you could get that Eiffel Tower pullback. But the area of 2.81 on the TVIX to 2.76, that's kind of an area that should be a very good cushion. So watch that. Now, what I want you to do is to go to NQU14, just to show what we were talking about yesterday. And what I'd said is, on the way down, because of that single leg up and down, which is kind of what we're looking at in the VIX index now, look at the 30-minute chart of the E-mini NASDAQ 100 S&P 2014 contract. It goes from that doji low at 7:30 in the morning on the 17th at 38494, spikes in one move up, leg A, to 392750, and then it turns around and comes down, and in that pattern I call the Eiffel Tower or single leg A syndrome, it pulls back and takes out the left side of 3894. Then the question came up right on this candle here, what is the count? And what I said is, sometimes you just got to treat it as a fresh thing. And I said, we have no choice here but to call it new leg A. If it turns into a buy mode, that's fine. But if it keeps coming down, that's also okay. And sometimes you can even get trough A to trough B to trough C, and then you rally. That's just the way it is. And that's exactly what we got. We trough A, trough the little V-shaped bottom there, trough B, and right there with the low and then the silent doji candle, there's a C minus. Why? Because it turns around and it rallies very sharp, and it goes peak A, B, C, D with a chance of an instant restart, E to an F, and my I says there's a good chance that we are within, at 39.14, we're a good chance we're within about a 1, maybe 1 to 2 points, I'd even say 1 to 1.5 points of some kind of reversal, which could take you just to a G and then pull back and close around about 38.99. That's what my eye is saying. But you've got the left side high of 3927.50 made at 10:30 on the 17th of July. So that would be an upside target if it doesn't fail pretty soon. Okay, I want to look at that. And then there was a question again. Okay, so just one thing about Facebook. Whoops, that wasn't the one that I wanted right there. Facebook. There's that it's called a flag pattern. I like to call it a falling axe if it meets other criteria, but in this case it really is a flag pattern. And it says that if Facebook does take out the strong resistance and just climb towards the 67.85 and then 67.90, then maybe the 68 area today or Monday without breaking under 67.17, that would be really a good stock. Question in the end about CVCO. CVCO is Cavco Industries. I have no idea what they're doing. But yeah, this is a very interesting chart. So it's trading at 79.01. And that's an A, that's a B, and that's a C, and then it fails. And that's an A, and that's a C, and then it fails. I'm not a big fan of a big peak C failure unless it's going to be the Chapman wave overlapping wave. So if you were in it, just imagine you were in it at the low, today was 77 round number low. Whoa, you didn't mention that. 77 round number low. If you got in right now at 79.01, I wouldn't want a 2-point stop in a stock like this. I want a much smaller stop. I'd say a 1-point stop. I'd even say a 70-cent stop. Why? Because the turn that it just made based on the daily and the 120-minute chart says if it's going to turn, it needs to make it pretty much like a V-shaped pattern and get to 79.52 to 79.62. It needs to do that in a hurry, real quickly by preferably Monday. And if it does that, it's turned the corner, and all I need to do is draw one trend line. Look at this, one trend line, and that says if it does turn the corner and moves like that, then the big challenge will be the 80.87 9-period moving average, and then, so it's moving out by a day, and then 82.30 is the big challenge to break above. So, okay, hardly any volume. Yeah, oh, no, I wouldn't touch this. 14,700 all day. If it's your own private money, that you could do that if you're very confident in the stock and you test it that you can get out in time. That's the only thing with a very light volume stock. It's not always possible. Look, like yesterday, you might not be able to get out until the very low at the bottom of 77.30. So that's a big thing about very low volume stocks. Now, what have we got? Yep, I want to do. Here's a question, and the question is, let's see. Gary says, dollar trin at 0.50, low of the day. Did this trigger a sell signal? Let me just double check. No, it did not. Let me just double check. I got 0.59. No, I do not yet have any signals at all. It's been very quiet, the Chapman wave trend gauge. So here's the other thing I want to look at. Look what's happening here. USU14. USU14 is the bond contract. And where are we right now? We're in E/B. This is a fascinating chart because it says the stochastic, this is now the daily chart of the Treasury bond September contract, has made either a W, like a U plus a U pattern. I like to think of it as just one big swoop from the downside to the upside, and it's going very nicely to a recovery high above the high of the 29th of May at 138 and 10/30 seconds. Yesterday's high was 138 and 21, and today's 138 and 23. So this candle that we're looking at here says, I'm still holding pretty nicely. And because of it, what I want you to look at is if I close above the candle of the 29th, above 138 and 10/30 seconds, looks like it's going to be tough to do. If I do that in the next 2 days and then move even higher towards the 138, preferably the 139 level, there's a chance that money could be flowing into bonds and away from stocks. But that would not be the case if the Dow, which is now up 104 points, if the Dow and the S&P continue to rally. So I'm going to do something here with the S&P. Look at the SPX.X has had two. Today will be the third. We'll have to wait for the close. But on a weekly basis, you went to 1985.59 the week of the 4th of July. The following week, it's just fractionally lowered, 1984.22. And now we've got a high of 1983.94. That is very unusual action. I'll be back. This is time for a break. Basil Chapman, Tiger Technicians Hour. Stay tuned and get your questions in at 877-927-6648.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, charges and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks, we're back. And the question of the day is, Basil, we got bad news and a high VIX. You seem a tad tentative on declaring sell signal. Will Monday close help in defining the next few weeks? Hey, that's a really good question because I thought about it this morning. I was going to articulate that concept in the Chapman Wave methodology. Then I completely forgot. Look, I cannot give a down arrow. You see, there's no, well, let me just double check here. There's no down arrow yet because the stochastic, let me just make it clearer here. The Dow, in the Dow chart, the stochastic's still at 82%. And the MACD, the price never closed, the fast-moving average, that's the 9-period differential, never went under the red line, which is the slow-moving average. You did get the price under the 9-period exponential moving average on the close, but that was also leg D. I can't put a down arrow when I don't even know if it's a peak yet, because today, who knows, you could still go all the way to a new high above 17,151 and 57. So those are my criteria, and what you will sometimes see is I do give a down arrow, and then the price a little later goes higher, and I have to put the plus sign because it's an F, and then the inverted, like a little A, that little inverted V-shaped pattern, the caret, and then I put the caret on top for a G to say that now I've got the real signal, but I followed all my rules for the down arrow, and the fact that the price went higher just tells me that there's like a coda, there's residual music to come, there's a little bit more of a story to come before it wraps up, and that's the way I work it. So in this particular instance, the day's young, it's not even noon yet, and I'm just going to make it real clear. If there is a close, I have to wait. Probably I'm going to now have to wait for close below 17,000 before I can put my down arrow to show that there's, usually I use the down arrow to confirm that there's a sell mode, but sometimes I do it earlier if everything's in place. So I'm not going to anticipate anything. I have to be patient to wait for it to conclude. Right now it looks like I've got the peak D. Right now it looks like I've got the D that is the same as the others that were above the 9 EMA. Now I've got to wait for a close in the Dow, another sell-off that occurs, preferably under the low of 16,966, a close below that. And then it's in a challenge, at least here I haven't got the inside track, but right here is the most important support level of 16,914, and it's rising. So that's what I need to do to be able to get a signal. If you look at the IWM, that already did everything. Look. That had a down arrow at 120.97. It did the left side, right side, price time match. It's plunged. It's gone all the way down to where? Very close to the 200-period moving at average at 111.80. Today's low is 112.20. So, folks, you've got Nico and Paige coming up straight after this, so stay tuned. It should be a great program all the way through until 6 o'clock this evening. My service is the opening call. Check it out. 2 weeks free. Very comprehensive look at the markets. And the most important thing right now is the volatility index is down at the, and let me do this, there it is. Volatility is down at 1232, touching the 9-period exponential moving average. If by the end of the day it goes even lower and the Dow goes even higher, it says hold off. We've got something going on here that's very unusual. This is possibly the little chipping away at a top. It's like, it's distribution in other ways through a rotation, and that's really the way I'm looking at it. So we'll see what happens. And by Monday, for this to actually trigger some kind of a determined sell-off, you want to see the VIX back above today's high of 1355, Monday, Tuesday, at least by Tuesday. If it doesn't happen, you've just got a sideways rotational consolidation. So this is going to be a really interesting close today. Look at that. The volatility index on the weekly chart went right to the second, I can't call it derivative, but to that right there, to challenge that inside track resistance at 1138. And now it's trading at 1182, 1338. No, it was higher than that. 1538, sorry. Okay, folks, I'll be back. Have a wonderful weekend. Stay tuned for great programming and enjoy the weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.